High-quality dividend growth ETFs have quickly become my all-time favorite investment vehicle for multiple reasons. Now, this is because they offer massive diversification with a simple click of a button into huge basket of stocks that offer investors like myself massive exposure to many different high-quality names without having to go through and manually litter my own portfolio with hundreds of different holdings. Now, they also offer dividends from day one, which I personally love the cash flow to use to reinvest into more dividend growth ETFs, but someday I'm looking to use this cash flow, these dividends, to cover things like bills or life expenses when it comes time to retire. But when it comes to investing into different dividend growth ETFs, there can be some confusion on which are the best and which are worth sinking your hard-earned money into. Now, in this video, we are going to dig into 3 of the best high-quality dividend growth ETFs, in my opinion, that offer massive price return potential, dividends from day one, diversification, and of course, my personal favorite, dividend growth. Now, stick around until the end when I unveil which of these dividend growth ETFs is truly the king of all dividend growth ETFs once and for all. I just finished my brand new dividend investing ebook where I share exactly how I went from 0 to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first dividend growth ETF to go through, this one's very popular and this one happens to be one of my favorite, is the Schwab US Dividend Equity ETF, or SCHD. Now, some stats on SCHD: the total expense ratio is 0.06%, so very cheap to own. The fund's objective is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now, when it comes to SCHD, it pretty much crosses off everything and anything a dividend growth investor would want to have exposure to. The ETF has grown over time in price, considering around 10 years ago, this ETF was trading around half of what it is right now. The ETF also has a really strong basket of holdings, around 100 different stocks in all, although the holding breakdown isn't necessarily ideal during at least the most recent time in the markets. And this is because the top sectors are things like industrials, financials, healthcare, consumer defensive, technology. Then the rest of the ETFs made up of things like consumer cyclical, energy, communication, basic material, and utilities. Now, the top 10 holdings in SCHD aren't necessarily ideal, depending on who you're asking. But there still are a lot of high quality names in here. Things like Broadcom makes up the majority of the ETF as of right now. Then we have things like Amgen, Verizon, Home Depot, abbvie, Coca-Cola, Texas Instrument, Merck, then BlackRock, Pepsi, and others. Now, one of my favorite aspects about SCHD though, and this is what makes this ETF very hard to beat in my opinion, the trailing 12-month dividend yield is 3.52%, which is a very decent starting dividend considering all the other things this ETF has to offer. But on top of that, if you look at the dividend growth rate that SCHD has, we're looking at a 9.43% on the 3-year CAGR, a 13% on the 5-year, and 11.39% on the 10-year. So basically, during any time frame historically, this ETF has paid more and more cash flow to investors in the form of dividends quarterly, which I absolutely love, being more of a dividend-focused, income-focused investor. The next potential dividend growth king is VYM, or the Vanguard High Dividend Yield ETF. Now, this ETF is also super high quality and has a product summary that says seeks to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of companies characterized by high dividend yields. Also, it says provides a convenient way to track the performance of stocks that are forecasted to have above average dividend yields. Now, VYM also pretty much crosses off anything you would really be looking for. It also has a cheap expense ratio, just like that of SCHD at 0.06%, offers price appreciation as far as ETF price goes. Historically, it's up 120%. Now, the holdings in VYM are sort of comparable to that of SCHD, if you ask me, but the sectors are definitely a little bit more mixed up. We have financials being the largest, then consumer defensive, healthcare, industrials, energy, technology. Then the rest of the portfolio is made up of utilities, consumer cyclical, communication, basic material, and real estate. Now, the top 10 holdings of VYM are things like JP Morgan, ExxonMobil, we have Broadcom, Johnson & Johnson, Procter & Gamble, the Home Depot, Merck, abbvie, Chevron, and PepsiCo. Now, the difference between VYM and SCHD so far, there's a lot more holdings in VYM, so there is going to be more diversification, which can definitely help in times where, say, 10, 20 of these names might not be having all that great of a year. Now, VYM also is not lacking in the dividend department, offering above a 3% trailing 12-month dividend yield, which offers investors decent cash flow from day one, especially considering they're getting the diversification and the potential price appreciation for this ETF. But the dividend growth is not necessarily up there with the SHD, at least not over multiple time frames. The 3-year CAGR is 5.25%, the 5-year is 5.6%, and the 10-year is 7% more or less. So although historically VYM has increased their dividend pretty consistently, and even as of recently a massive dividend increase, over time the dividend increases have sort of lagged that of SHD, which is something to note. Now the last potential dividend growth king as far as dividend growth ETFs go is DGRO, or the iShares Core Dividend Growth ETF. Now here on the iShares website it says why DGRO. DGRO offers low cost exposure to US stocks focused on dividend growth, access to companies that have a history of sustained dividend growth, and that are broadly diversified across industries. Now DGRO, since about 2014 or so, has appreciated in price around 113%, so not too shabby at all. DGRO does have the most expensive expense ratio at 0.08%, but no one's really going to cry over 0.02%. Now DGRO, in my opinion, might have arguably some of the best top 10 stocks, but first going through the holding breakdown, it says financials at the top at 20%, then we have healthcare technology is 16%, so there is the most technology breakdown compared to the 3 that we went through so far. Then we have industrials, consumer defensive, utilities, consumer cyclical, energy, basic material, and communication. Now for the top 10 holdings for DGRO, I like these holdings a lot. I will say maybe even the most out of all 3 so far. We have Microsoft at the top, JP Morgan, Apple. I mean, just those 3 alone are super solid. Then we have Johnson & Johnson, abbvie, ExxonMobil, Broadcom, Chevron, the Home Depot, and Procter & Gamble. Now, DGRO is also very diversified with 434 different holdings. So just like that of VYM, there are a lot of different names within the basket, which some investors of course love, but maybe some investors would rather have it be a little bit more concise. Now going through DGRO's dividend and dividend growth, the dividend yield is 2.38%, which is the smallest out of the last 2. But again, keep in mind this ETF does offer some massive potential appreciation as far as ETF price. And also the dividend growth rate is massive. Trailing 12-month dividend growth rate, 12.04%. So the dividend for DGRO has grown substantially year over year. But the dividend growth rate on the 3-year CAGR is also big at 8.76% and almost 10% in the 5-year. So DGRO is definitely not lacking in the dividend growth category, although if you buy DGRO, you are going to start off with a little bit smaller yield. So now that we went over SHD, VYM, and DGRO, explained what each of these ETFs have to offer, it's now time to stack them all up side by side, use the metric total return as the metric. So this is dividends plus price return included, and see which of these we can truly name the dividend growth king, at least as of right now. Now before we go through and unveil which one's going to be the winner, I want you guys to comment down below real quick, which is your favorite out of these 3 personally. So as far as total return goes, year-to-date performance, DGRO is number 1 at almost 10% return. Then we have VYM at 5.3 and SHD at 3.7. Over the last year time frame, DGRO still at top at 9%, then VYM at 5.3, then SHD at 3.6. But over the past 3 years, things changed a little bit. VYM is now the leader at 33% return, then SHD number 2 at 30, then DGRO at 29. Now last but not least, over the 5-year time frame, SHD comes out number 1 at almost 89% return, then DGRO at 80%, then VYM at 63% return, which is crazy. So there we have it, SHD is still and remains the dividend growth king as far as at least total return goes over the last 5 years. But now I want to hear from you guys down below, out of SHD, VYM, and DGRO, if you could only hold on to one of these ETFs for the rest of time for whatever reason, which one would it be and why? Drop the ticker in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.